difficulties. I didn't get to do it to this class last week, so you have it now. Prepared and presented again by Mr. James. First, we look at the use of the cash book. The cash book is used to record all cash and check transactions. So any transaction that involves cash, money, dollars and cents, and or a written check is recorded in the cash book. You have two kinds of cash book, a two-column cash book. As the name suggests, it has two columns. All right, the names of the columns are cash for recording cash transactions. That is cash involving actual money, and bank for recording those transactions involving checks. Okay, businesses use the two-column cash book if they don't give discounts. Businesses that give discounts have to use a three-column cash book. And in addition to the cash and the bank column, there's another column for the discounts. A two-column cash book would look something like this here. It's a book ruled up like this, and it has many pages in it. A page, you use a page each month. Sometimes you use more than a page each month. And this page is page 32 at the moment here. So we have a column for cash here on the debit side, and a column for bank or checks on this side. And we have a column for cash here and a column for bank on the credit side as well. The other column is for the folio, and we have one on this side too. The folio is a reference to which ledger you are going to record the other side of the transaction in. Okay, we will get to that a little again. Again, we have columns for the date here. We don't see the line drawn, but there could be a line drawn here so that this column here is for date and this column here is for the details. Similarly, on this side, we'll have the same thing. Okay, this column for the date and this column for the details. Okay, so this line here divides the cash book into two sides, just like an account. Okay, so you have a debit side and a credit side. The side here is the debit side, and the side here is the credit side, as usual. Okay, now the cash book merges the cash account and the bank account. Okay, and just so you would notice here, we have date, details, amount, and you can easily have a column here for folio if you so wish, right? And okay, the cash book, the two columns, this is the cash account, and this one will be the bank account. Right? Now, when we receive money, we record it on the debit side. Okay, so this side is the side for receiving money. And when we pay out money, we record it on the credit side. This is the side for payments. You don't have to write in these You just have to remember that, memorize that, okay? And the name of the people that we receive money from comes in here. The date when we receive it comes over here. And in the case of capital, you know it's the owner, right? And these are, if you're receiving money from them, it will most likely be for sales, right? But it's sales. And on the side, we have the payments. What do you pay for? Pay for rent, pay for printing. If we pay a person, it will most likely be a creditor, somebody we owing for goods or services. You see the name of a person or a business here. Okay? And then you balance it as normal. Now, if you receive cash, you will enter it in the cash column here, in this column. If you receive a check instead, you enter it in the bank column. If you pay by cash, you enter it in the cash column. And if you pay by a check, you enter it in the bank column here. Okay, so just a little bit of rocket science, and you can write up a cash book. Right? So we want to focus on the folio columns a little before we go to the 3-column cash book. If we see something here like capital, the folio would be general ledger, and this is the page number. The number is the page number. So if we go to the general ledger, on page 1, we should see the capital account there. Okay, that's what the folio does. M. Boone, on the other hand, he is paying us money. So most likely we sold something to him on credit and he's paying for it. The SL stands for sales ledger, and this again 98 is the page number where you will find his account. Okay, sales is not a person, so you wouldn't find it in, you'll find it in the general ledger. All right. On this side, this is not a person again. Okay, so GL, general ledger. S Wills is a person. We are paying him. It is on the credit side. PL would be the purchases ledger. So we are buying from him. That's why we are paying him. And you would see his his account on page number 23. Okay, so that's how it works. Now this one where you see a C and the C is crossed out, that is called a contra. The C is for contra. And what it means is that the item cancelled off with another item on this side here. So you look for the 29th, and 29th you should see another one to see here. These two cancel off. When you look at the transaction and you read it, you'd see you received some money in cash from the bank. Okay, and here you would see you paid some money out of the bank, or you took some money out of the bank and you put it in your cash account. Okay, so it contra out. The double entry takes place right here in the cash book. You have the debit and the credit, right? So there's no folio. That's why we put the C and we close it out. It's the only type of transactions that works like that. The reverse of it is also true. If you take some of your cash like this one here, and you put it into the bank, right? You, since it involves cash and bank, you should see it on the other side too. Right? See on the seventh here, you have it again, right? You take in $50 from cash because it's credited, so you're paying out the $50, and who you are paying it to? The bank, right? You're putting it into the bank. You have bank in the column here. Okay. At the bottom here, the names are spelled out, so you can general GL is general ledger, SL is sales ledger, C is contra. That means the account cancels off right there in the cash book. You don't have an increase or decrease in other assets, but your money stays the same. And purchases ledger PL. So that's what goes into the folio column. This will take a few transaction recording, quite a few transactions before you begin to get them all correct, right? But it's possible to get all of these folios correct, right? So you will have to practice those. We want to take a look at what happens in the third column in a three-column cash book, right? The cash discounts. A cash discount occurs when a business accepts a smaller payment, notice the word smaller payment, in full settlement. Okay, so like if you have somebody owing you $100 for some goods and you accept $95, you would have given them a discount of $5. And because it's a discount in cash, it's called a cash discount. Okay, and usually you do that if they make the payment within a stipulated time. Like most of the time in businesses is if you pay within 15 days, you get a further discount from your trade discount. Okay, the amount of the discount is called, right? No, this is the amount, not at the percentage. Okay, the reduction is called a cash discount. It must be in cash, right? It cannot be a percentage. If I ask you a question, how much discount you get on that item, you cannot tell me 5%. You have to work out the amount and write it into the cash book. Okay? Discount allowed. This is when we give a cash discount to our customers. It is called discount allowed. Discount received when we receive a cash discount from our suppliers. Okay, this is coming now from our suppliers and it's called discount received because we are receiving it. Okay, so over here, discount allowed, we are allowing our customers it. So it's called discount allowed. There's a difference between cash and trade discounts. Okay, now students tend to get confused with these. When you're buying goods in bulk, you get what is called a trade discount. You haven't paid for the goods yet. You just go to buy. No discussion is made about payment yet, but because of the amount that you're buying in a huge amount, they'll get, they say we will give you a 25% discount or something like that. Okay? And cash discounts take place when you're going to pay. If you pay promptly, if you pay right away, it becomes a cash sale, right? and you can get a further discount. If you pay within the credit period, they can also give you a discount that is called a cash discount. Okay, it's not for bulk. It's for any other. It's for prompt payment and for any other reason. But usually it's for prompt payment, but not because of bulk, right? Um, by prompt, we mean you pay within the credit period to get the discount. Okay, right? So it's a common mistake to try to balance the two discount columns in the cash book. We'll come back to that. But the summary of the discount, the cash discount is a reward for prompt payment, right? And trade discount is a reward for buying in bulk. Okay, this is a rather small percentage. And like I said, you don't usually put the percentage, you look at the amount of the money. Here, it's the percentage. This one could be small, but the amount could be large because of the size of the bill, right? Can be large in percentage terms, say 15 to the 33, 30, right? If you buy plenty, you get part of recorded as part of the double entry. So your cash discount is part of the double entry recorded in your books. No record is made of a trade discount, right? Because you never had to pay that in the first place. Right, a three-column cash book would look something like this. Now that we know all the items, cash book, page 32, and you'll have in addition to the cash and bank, you'll see a discount column and a discount column on the side. This side is the discount allowed. Okay, I have to remember to put in that word allowed there. And this side is the discount received. All right. The reason for that is always the same. Only when you are paying on the payment side of the book, you get you could receive a discount. And when people are paying you on this side, you can allow them a discount. So discount allowed is on the debit side, discount received is on the credit side. That is always so. In this picture here, they didn't even bother to write in the allowed because that is known that the debit side is discount allowed and the credit side is discount received. Okay. Notice the discounts are placed in the same line as the payment or the receipt, right? You receive here. From this, you can tell that the full bill would have been $100. And you paid 95, and you got a discount of 5. From here, you can also tell that the payment was $400 you were supposed to make, and you paid $390. You paid with a check for $390, and you got a $10 discount. Okay, notice this could have been written as a percentage, but it's not a percentage, right? It's you have a pound sign at the top here. It should have been a dollar sign, but it's an English book, right? Is when you drawing up your cash book, you put dollar sign up here. So you cannot write a percentage here. You have to calculate the amount and put it in here. Okay? So this here, you cannot write 5% for this one. Okay, there's a 5% discount. You cannot write 5%. You have to write uh, $5. So if you didn't know how much it was, you have to calculate 5% of 100 and then writing the 5 here. Okay, a work example. Right, we have here some figures. Balances brought down from the previous period, and there's how much cash we have in the bank and how much we have in hand. And these are people that owing us here, accounts receivable. These are people that um, we are owing money to. And these are some transactions that take place afterward during the month of May. So we will look at how that would look like. We have a three-column cash book. We know we need a three-column cash book because we see in that people paying and receiving discounts here, right? Okay, and we start with the opening balance, put in the date, May 1st, balance brought down in the folio column because that does not have a correspondent book, and the 29 in cash and the 654 in the bank. Notice we have nothing in the discount column because there is no discount there, right? That comes from here, 29, 654. Okay, and then we receive on the BK pays us by check, that is here. BK is one of our debtors up here, right? And he pays us and deducts 2.5% cash discount of $3. Okay, now sometimes they don't work out the $3 for you, and you have to find 2.5% of it. Okay, you cannot write 2.5% in the book. So you notice here they work out it to 2.5%. They get 3, you put in discount column, and 117 here. How we know it is 117 there? King was owing us $120, and he take a discount of 3, or we give him a discount of 3, so he will only pay 117, right? And that comes in here. Okay, our next transaction, we pay our long his account by check, deducting 5% cash discount of $5. Okay, so we look at our long, we are paying him this time, so his accounts payable, our long, and it's $100. So 5% of 100 will give us 5, and we pay him 95, right? Since we are paying here, we come to the credit side of the book. We write it in here. May 8, our long, okay, and his folio would be in the purchases book, page 58. Okay, right? We withdrew 100 cash from the bank for business use. So what this means is that we are taking cash from the bank and putting it in cash in hand, $100, right? So both, this is a contra transaction. It's going from cash to bank, okay? Right in the cash book. So we are taking it out of the bank. So we have it on the credit side here, 11, 100, and on this side here, we put it in the bank, 100. Notice the dates are the same. Right, and that brings us to the end of our slideshow for today. And next